Good morning. You're watching Power Breakfast on CNBC-TV18 from the Mumbai News Center. I'm Sonal Bhutra, and those are the top headlines that we are tracking this Monday morning. A lot to catch up on. But first up, as always, let's take a look at what the Asian markets are doing today. Most of them are shut. We have Shanghai, which is shut today. Korean markets are shut, as well as we have no cues coming in from the Hang Seng markets as well. So let's pull up the Taiwanese index for you, because that is largely in the green as we speak. We have Taiwanese index up around 1.7%, and across the board, we are seeing a big bout of buying as far as the markets in Asia are concerned. Even if we look at the Nikkei, that is higher in the green, up around 1.1% as we speak. And this is after the positive handover that we got from Wall Street. Of course, the big number that everyone is watching out for is the US inflation fine print, which will be out tomorrow. And SGX Nifty, as a result of all this, is indicating that the start could be mildly in the green. Actually, it has come off from the highs. It's absolutely flat, but with some positive bias. So that is something we'll be watching out for. Let's talk about the US markets. Wall Street ended Friday's trading session sharply higher, with the Dow Jones gaining over 1%, the S&P 500 surging over 1.5%, and the Nasdaq Composite, the day's outperformer, closing with gains of over 2%. CNBC's Sarah Eisen gets us a wrap of all the action on Wall Street.
Stocks ending higher for the third straight day, with the major averages notching gains for the week, breaking a three-week slump for stocks. The Dow advancing nearly 400 points, adding more than 2.5% this week. The S&P 500 finishing the week up more than 3.5%. And the Nasdaq, the biggest winner of the three major averages, closing up more than 4% on the week. Electric vehicle maker Tesla considering building a lithium refinery plant on the Gulf Coast of Texas to support more EV production. According to a newly released letter to the Texas Comptroller's Office, Tesla says the plan would be the first of its kind in North America. Prices of lithium have exploded over the past year amid the surge in electric vehicle batteries, where metal is a key component. The company said the operation could be up and running by 2024. That's the action from the U.S. market. Back to you in Mumbai.
Okay, all right. That's the update from the US market, snapping that three-week losing streak. But moving on to some important commentary coming in from the Federal Reserve. Fed Governor Christopher Waller on Friday hinted at another potential 75 basis points hike and said that he supports a significant increase in policy rate. He further suggested that the Fed should get away from its practice of providing forward guidance, and that future decisions on rate increases should be solely determined by economic data and the implications for economic activity. Moving on to some very important opinion coming in now from former Fed Vice Chair Richard Clarida and Morgan Stanley Investment Management's Andrew Sliman. Listen into what they had to say.
I think they're going to 4% hell or high water, if I had to put it into two boxes. They are data dependent, but that's why they're going to 4%. Inflation is way too high. Inflation was way too high last year. The Fed had a lot of company, and I was part of it in getting the inflation forecast wrong. But job one, and really I think of the Fed right now, until inflation comes down a lot, the Fed's really a single mandate central bank. The chair made clear the Fed knows that if you squander price stability, it's very hard to achieve and sustain maximum employment. So I think that they are data dependent, and the data's inflation's too high, so I think they're going at least to 4%. The problem is that the shock that the economy took globally with the shutdown and the pandemic and the reopening was an enormous shock. It was almost like a war-like shock. So there's been a lot of dislocation, and unfortunately a piece of that is the economy got out of balance last year, in part because of policy and in part because of other measures. And I think Chair Powell is correct that over the long haul, you can't prosper in the economy, as we saw in the 70s. You and I remember the 70s, with high and variable inflation. So I agree, it's not a great place to be in. If it were just Putin, you would be right. But unfortunately, the economy is out of balance now.
The market will end the year higher than where we are, simply because companies are not affirming this very negative outlook that, many of the bears have expected. Right. I think the yield curve is telling you that we're going to have problems, but I don't think it's this year. I mean, earnings are proven to be, corporate balance sheets and consumer balance sheets are too strong. That we have been able to withstand the shock. And so that opinion that it's out there, yeah, at some point, it's just not happening yet this year. I think there's a bigger risk next year, but not this year.
Okay, to the final update now on our global market wrap. European markets closed higher on Friday with all the major averages, the French CAC, the German DAX and the British FTSE closing with gains of over 1%. In an important update, the Bank of England has postponed its September monetary policy meeting by 1 week following the death of Queen Elizabeth II. The BOE's decision will now be announced in September 22. And that's the global market action. But how will these overnight cues impact our own markets? We have a research team joining in with what the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. We have Ekta and Nigel joining us now. And Nigel, who is also celebrating his birthday today. So very, very happy birthday to you, Nigel.
Thanks a lot.
But Ekta, let me come across to you first. What is the market setup looking like today?
Thanks, Sonal, for that. And Nigel, wishing you a very, very happy birthday and a very successful many years ahead as well.
Thanks.
I'll just concentrate on the markets now, and Nigel will take it forward from there for the F&O space. But for the Sensex and the Nifty, you know, it snapped its 2-week losing streak. Both the indices were higher by around 2% each last week, so that's definitely a positive. Mid-cap index gained for a 12th straight week. The Nifty Bank also rose for 3 consecutive weeks. So we really had the momentum in place. Now, factors such as easing crude have definitely aided sentiment. We have the FIIs which have committed in terms of the cash market in the Indian market. So FIIs net bought over 2,000 odd crores in Friday's trading session, and DIIs net sold over 1,100 odd crores. Now, in terms of the cues, it is a lot about the macros. So, for example, you did mention that the ECB undertook a record hike of 75 basis points. Despite that, the European markets shrugged it off, closed higher. Inflation expectations, in fact, in Europe have now been hiked to 8.1% in 2022. And we had the US markets which closed higher. So the Dow closed 300 points higher. So it seems as though the markets are now concentrating on life beyond inflation, maybe some amount of commodity softening taking place, and maybe the fact that the worst of the Russia-Ukraine crisis could be behind us. Oil rose over 3% on supply threats, but net it has been lower. Dollar also was at a 1-week low. It has retraced from those 20-year highs. We do have important cues. So we have the US CPI data, which is on the 13th of September for the month of August, and that is expected to probably soften to 7 to 8% versus, say, around 9.1% that it was in June. We have the Fed meet next week as well. July IIP and August CPI this Monday, which is this evening today for us. A sub 7% reading for the CPI is what is expected. Asia largely in the green in terms of what's open. SGX also indicating a bit of a positive start.
Okay, all right. Ekta, thank you so much for all those cues. But a lot of stocks that will be in focus as well today.
Well, yes, I'll start with Reliance, and there is an acquisition of the polyester business of a company for a cash consideration of over 1,500 odd crores. There is a maintenance shutdown of one of their crude distillation units as well as their FCC units, so that would be in focus on account of that. Standard disclosure, it is the owner of the channel that you're watching. HG Infra, wholly owned subsidiary, has received a completion certificate for a project which costs around 952 crores. Gujarat Industries Power also in focus on account of an EPC contract which they've issued to KEC. IRB Infra, refinance of a project loan, that's why that's in focus. Trident, they've come out with their monthly business update, so do watch out for that particular one. Granules and PI have both denied the story of PI looking to buy Granules stake. ONGC has signed 6 contracts for discovered small fields. Maybe Sonal, you'll throw more light in terms of the details on that. Anupam Rasyan's tragic news coming in there. There's a fire incident which took place at one of their plants, and there were 4 fatalities, unfortunately, which were reported. Aurobindo, the Form 483 with 3 observations for the Unit 11 has been accessed, so that will react to it. And Titagar Wagons, they've seen a small investment from a unit of the government of Italy in their subsidiary in Italy, so that stock would be in focus as well.
Okay, that is a long list, Ekta, but thank you so much for running us through all of those important names that will be in focus today. And finally, to the birthday boy who is joining us with all the cues from the F&O space. Hey, Nigel.
Well, thanks, Sonal and Ekta, for your birthday wishes. And it's good to be back. Couple of years of COVID, I missed out, celebrating in the office, but happy to be back. And thanks a lot for all your blessings. Well, let's focus on the market then. The FI flows, they're something that really holds us strong. It continues in the positive terrain. So the FI is bought more than 2,000 crores. The DIs, well, they offset some part of that good work. They sold close to around 1,100 crores. On the F&O side of things, on index futures, well, there was unwinding on both the call on the long as well as on the short side on. And remember, the country remained net short on the index. So close to around 78% of the positions are on the short side. On index options, well, you're not really getting a direction out there because they're buying calls, they're buying puts as well. But on the writing side of things, well, they wrote calls very, very aggressively. That's telling you at higher levels, well, the bears, they want to put in a fight. Whether they'll be successful or not, well, time will tell. But in Friday's trading session in particular, the 17,900 call, the 18,000 call, just take a look at the surge in the open interest. The open interest in a couple of those instances were up close to 50%. In a couple of instances, they were up even double and even triple, nearly triple out there. So aggressive call writing is what we saw. However, on the put side as well, the 17,900 put, well, that's sort of a lot of open interest build up, telling you there is some writing and there'll be support at lower levels as well. So what are the levels you're looking at? Resistance, 18,000. That's the mark the bulls want to get into. That's the mark the bears want to defend. But the 20 DMA, which is up for you on the screen, that should serve at a bit of a support. First things first, this morning the SGX Nifty suggesting a bit of a positive start. So let's see how things go from there. But some bit of resistance could creep in at around the 17,900 to around that 18,000 odd mark.
Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18. It's time to focus on key macro data due to be released today. CPI for the month of August is seen at 6.84%, which compares to the reading that we got 6.71% in July on the back of rising food prices. Although CPI is likely to harden on a month-on-month basis, a sub-7% reading will be the second consecutive inflation print below 7%. Food inflation likely to rise, led higher due to higher prices of cereals, pulses, and to some extent milk. IIP for the month of July is seen at 4.77%, which is lower compared to the 12.3% sequential growth seen in June, while lower core output growth being the key drag this time around. And India is a bright spot on a dark horizon. That's the word coming in from the chief of the IMF. With India set to take up the G20 presidency, speaking exclusive to CNBC-TV18, Christina Georgieva said India can become the voice of emerging economies. Sharing the IMF's outlook on the global economy, she warned that 2023 could be worse than 2022 for the global economy.
India, on this dark horizon you described, is a bright spot. And it is not by coincidence. It is the outcome of reforms India has undertaken, especially in the field of digitalization. And second, that India is truly poised for its big moment on international stage. As it takes over the G20 presidency, it has a lot to offer from its own experience, and it is going to be leading in a particularly challenging time.
But I want to understand from you the role that India can play as it takes on the G20 presidency. For instance, in your conversations with the finance minister, I understand that she urged the IMF to take a proactive role as far as global regulations on cryptocurrency is concerned. So what do you believe can be the role that India, in coordination with the IMF, can play on some of these crucial issues?
I see three areas where we can work very productively together. We can support the Indian presidency. First, with strengthening the multilateral system. It is now being challenged. There are forces of fragmentation, and they're going to be damaging for emerging markets and developing economies. Let's remember that the emerging world quadrupled its economy in the last 3 decades. And 1.3 billion people have been lifted out of poverty largely because of international cooperation. So there is a lot at stake, and India will be speaking on behalf of emerging markets and developing countries. We will be supporting that wholeheartedly.
Do you anticipate that 2023 is going to be far worse than 2022?
It would be worse. How much worse depends on a variety of factors that we don't know. The longevity of the war, whether there would be any other shock. But there is one factor in our hands, how collaborative we are. The more we work together, the less pain there will be.
Hi, welcome back. You're still tuned into Power Breakfast on CNBC-TV18, and it's time to talk commodities now. Manisha Gupta is joining us with all the update. Hey Manisha, good morning.
Hey, Sonal, thank you for that. Well, we are looking at slight decline in various commodities as we start a new day here. Crude oil prices, for one, have slipped by nearly 2%. There was a 4% gain on Friday as we saw the markets there. Well, the reason for decline is that Chinese oil demand is headed for a contraction for the first time in 2 decades. Markets are still wobbly as you look at the price cap on Russian gas, which is proposed by European Union ministers in their meeting on Friday. On the other side, Russia also has threatened to halt all energy exports to Europe. So there's a lot of happening on various sides here. Having said that, the markets will watch out for the U.S. Data that will be released on Wednesday. You have the U.S. Fed monetary policy meeting on September 21st. So it really is going to be about a hike in interest rates and the Chinese demand that continues to weigh onto the market. But not just the energy prices, there's a decline in metals as well. Copper prices have opened Asia 1% down. So is the case with aluminum and zinc as well. So after gains in previous week, this week has started on a weaker note.
Okay, all right. That is all the update coming in from the commodity space. Manisha, thank you so much for joining us. By the way, the Asian markets, they continue to be higher, but the SGX Nifty, that has come off from the highs. So keep an eye out on that one because that is something that will indicate moves for our own markets as well because SGX Nifty now has slipped into the red with a downtick of around 3 odd points. With that, we'll take your leave on this edition of Power Breakfast. Do stay tuned. Bazaar Morning Call comes up next.